Let's get across the market open now. Jimmy Jang joining us from GBA Capital. Jimmy, welcome back. Good to see you on this Friday. How would you describe what you're seeing in markets at the moment? You look at Wall Street, in touch or very close to those record highs. What's actually driving that optimism at the moment, do you think?
Morning, Andrew. Of course, like we're seeing that kind of demand coming from the US with the obviously the ceasefire kind of fuel the market. Oil prices obviously coming down. That's kind of fueling that, the inflation that is going to come off, and hopefully that will give a good news to the Fed over there to kind of cut the rate. At the moment, I think mainly the investors are very happy that the volatility in terms of the war is slowly coming off, which is great, and the market is rewarding that at the moment as well. So we're seeing a lot of kind of fueling market, especially on the Nasdaq. We saw the record high, as you said, Andrew. So we're seeing that kind of really good demand over there, and hopefully that will flow down to the Aussie market as well. And we've seen a lot of great companies that we've been backing for a long time, performing really well.
Such as?
Look, I think it's a topic of the day, Andrew. We saw Drone Shield, obviously, they're having a close to about 23% this month. The move off was obviously back off their biggest contract with that company, the history. They secured that $61.6 million package from that European military customer via their local reseller. It's for their handheld kind of counter drone system, which basically is a tech that kind of detects that and also neutralize that drone in real time. So the delivery is all kind of locked in their third quarter this year. And what's really impressive is that this deal is actually going to be larger than their entire 2024 revenue. So the market has definitely rewarded that over the past month. But they've also been building that inventory in anticipation of these kind of contracts, which is obviously now paying off because of the speed of the delivery is a major kind of priority in defense, as you know. And this one kind of makes that contract revenue for 2025 to potentially around $161 million, which is already being their internal forecast. So market definitely rewarded that.
Look, other big news this week, Zero with its foray into the States, which comes at a cost, of course. What did you make of that?
Hmm. No, of course. I mean, Zero's kind of going all in on the US at the moment. So they're buying Melio, which is a US payments platform. It's to kind of supercharge their US expansion plan that they've been kind of growing for a long time, and obviously it's a better integrate accounts receivable and payable for their business model as well. So the idea is to kind of offer the accounting and payments on a one platform, which obviously 70% of the US small businesses they really want it. So Zero is getting a lot of good attraction in terms of their customer base. And the deal is kind of being funded through a mix of 1.585 billion dollar placement, there's a $200 million a share purchase plan, and obviously a script and a debt. So they're really kind of going all in, and to be honest, the shareholders been awarding it for a long time, and they've been kind of backing the potential, the revenue, and also the expansion that they've been kind of lingering around the US come to reality as well. So, one of the main thing is Melio, which is the company that they are kind of acquiring. They are a loss-making company, but they have the 80,000 customers, and they proceed about $30 billion in payments a year. So if Zero can kind of integrate this quite well, and obviously they're kind of hoping to do more than just double their revenue by financial 28, which is their target to about $70 million revenue and $20 million in cost synergies by then as well. So really good news for Zero.
Now, interesting what's going on in the M&A space at the moment. In particular, there's battle over PointsBet with Japanese Mixi thinking it's there, better. The issue over proxy votes. How do you see this very messy? What's going on?
Mm, mm. No, you're spot on, Andrew. Like, I don't think I have seen this kind of messy M&A, for a while. And one of the main thing is that PointsBet is obviously going through that shareholder approval to potentially 1.220 per share cash offer from the Japanese Mixi. And it is getting overwhelming support. So that was about 96% approval. It kind of wraps up what's been pretty turbulent period for PointsBet. And the company's now set to merge with Better BETR, which says it's kind of all about 10% online market share for the post deal. So the market is kind of having a bit of a muted kind of reaction. It's a straightforward outcome for the time being, but the shareholders are likely kind of to relieve from that and the exiting at a premium. But we're not sure whether this will be a great news for the general public and also the other shareholders that's potentially looking at the points back. So very interesting to kind of look at this M&A, and it is very exciting kind of M&A that we're seeing this year, but probably very close to monitor at the moment.
Elsewhere, you got your eye on Dalrymple Bay, obviously with the coal export terminal there. What's your interest?
No, of course. I mean, Darrenpool, obviously, as the market knows, they, one of the major shareholders, or I should say the major shareholder, Brookfield, uploaded about $428 million stake at 3.72 shares. And we took a little bit of a bite out of that, block trade when it came out that night. And so, from since then, we saw some strong support from the market. And Brookfield made it pretty clear that they're not uploading their shares for any particular reason for the company. They're just kind of realizing that the profit that they've been obviously accumulating for this year, and they're kind of reallocating that elsewhere. But for the viewers that doesn't know DBR as much, the core business, as you mentioned, Andrew, they operate that coal export terminal. But what's kind of really interesting, and the reason why we took that block trade is because there are capital spend plans over the next few years. So that's going to allow them to charge higher rates. And they also flagged obviously potential index inclusion into the ASX 200. That's going to be obviously getting a huge support from the market as well. And obviously that their debt costs are rising, which is one of some of the concerns a lot of brokers has been kind of demonstrating for the past few months. But they're still growing distribution, and so it's a kind of yield play, really good yield, around 6.5 to potentially 7% depending on the share price. Really good kind of industry, which is what we like as well, and then upgrade that angle, or potentially with this potential inclusion to the ASX 100. So definitely for the viewer that doesn't have that in their portfolio, it will be a good one to monitor.
And just finally, SRG Global, it's won about $850 million in new contracts.
No, it's all about scale, Andrew, like you said. Obviously, they announced that 850 mil, new contracts across Australia and New Zealand. SRG is a company that I've been kind of backing for a while now, and I spoke very publicly on Ausbiz as well. And now these are some of their repeat blue chip clients, in Australia and New Zealand. So there's a strong endorsement for the SRG. But what's kind of really interesting about SRG is their diversity of sectors. So they're winning works across everything from water and energy to defense, and obviously data center, which is a topic of the day, and then obviously the commercial projects as well. So look, I think this is one of the moments where it's a good reminder that SRG isn't just that mining or a construction story anymore. It's now becoming that more broader infrastructure service play, and which is obviously giving some resilience in this market as well. So still a long way to grow from my perspective. So a lot of the viewers should be taking the very close eyes on SRG at the moment.